team.
All right, ladies and gentlemen, welcome back. We got the last day of the month on our hands, Wednesday, July 31st. We had a big Fed day. We're in the thick of earnings season. Tons of news. Markets moving. We've been selling off the past couple weeks, led by the NASDAQ, finally coming down. NVIDIA was 27% off highs last night. And my dogs are running around back here, excuse me. NVIDIA was 27% off highs last night. Very quickly lost 1 trillion in market cap. And then we got that crazy bounce back today. So, a lot of questions to be asked. Is the bottom in? Is tech finally set to turn around? The Fed did not cut rates today. They're setting up a cut in September. It's almost all but certain at this point. So, does the market take that as kind of fact and run on that news? Do we consider this a bottom? Now, Microsoft had earnings last night. Very big call. The reason it's such a big call is that they do so much business with so many of the smaller companies outside of, themselves, that they're a huge indicator for the tech health as a whole. So their earnings and most importantly, their Azure cloud growth. It touches pretty much all the software as a service stocks, as well as cloud stocks. So last night they initially announced growth was slowing. Microsoft's down 7% on the news. All tech is getting sold. Looked like a bloodbath after hours. On the earnings call, they said 100% of their CapEx spend will be spent on AI and cloud, and that they expect the Azure to continue to accelerate growth after this year, that the growth only slowed down due to high rates and things like that. So once that news hit, everything changed. Microsoft back up. NVIDIA went from 100 to 112 in like that, like a flash, once that conference call hit. So there's a ton of market news going on. We had a Fed day today. Let me get into the charts a little bit. You got anything you want to touch on before I get into the charts?
No. Jump in.
All right. So in my old age, something I've learned is that, when we first started trading, Bennett, the V bottom was like, we were trading the 20 teens in a ZIRP, zero interest rate environment. The V bottom happened more than it did, correct? Wouldn't you agree with that?
Yeah.
Now, V bottoms, I haven't seen one since. So during my formative years trading, I almost got accustomed to seeing V bottoms and almost began to expect it, which, then began to hurt me as I didn't realize how really bottoms are formed. So I've learned in the years since that bottoms are a step-by-step process. All right. Let's look at these last bottom in the Qs. We sell off like crazy. At this point, I'm looking at right here, this day. You're looking at this chart. It's like around the top. It looks like death. Where's the buying going to come from? And that ended up being like a huge market low. But going into the day, how could you really expect that to be a market low? It's like we crushed that, whatever that is, 100-day simple moving average support. This little trend line support, crushed, downside. Nothing's looking good. What happens inside day, we get a move higher, and then we create a higher low. And then we create a third higher low. As we keep back testing these areas, we get a little wedge, little consolidation, and then this pop. Then we get this gap up. And this gap up is an absolute buy signal if the gap up holds. Because 2 higher lows, we got that consolidation, buyers stepped up. Now the gap up taking us out of this pattern, capitulating bears, that's a bottom right there. Then what happens? Market goes on a crazy run. And this signal of this bottom, let's say you hypothetically bought that 436 versus 432, you didn't get any real sell signals till pretty much we broke down this 490 area. You can say this is a sell signal, whatever. But the lesson I'm trying to display right now, it's a process, these bottoms. So we got step 1 today. The step 1 being we got the capitulation low, we got some of these earnings names out of the way, we got the Fed out of the way, and boom, we gapped up to this level and we held the level. Most important aspect is that we held this intraday level. That is the most important part. So from there, now what you want to see is you want to see hourly levels back tested in a successful way. So if this holds, if it comes down and tests this area and it holds and we bounce tomorrow off that, that's a very bullish signal that we'll see this price action continue. If we come down tomorrow and just puke this area, which is a huge possibility because we had a Fed day today. The day after Fed days are notable reversal days. So if we see all this price action just reverse tomorrow, we're in the same slop we've been in. But right now we got step one of a bottom in place. So, this doesn't mean go out super long or just start buying everything in sight. It's to look for the next signals to get long. Now, do we hold these lows here? Do we continue? That all remains to be seen. But we got the Fed day out of the way. We got Microsoft's earnings out of the way. We just had Meta after hours. Meta now is gapping up to 493. What do you think that's going to do to the Qs? Qs are already gapping up a bit after hours. So it's looking like this price action could continue from here. But again, step-by-step process. You got to take these things one day at a time. It's not just like, oh, that's a bottom, and then you start buying everything in sight. The only thing, and then last thing before I hand it over, is the only time that I saw a definitive bottom where I was like, oh, that's a bottom, was, do you remember this candle back here? This markets look pretty gross. And then we had that Friday just buying spree. Now we'll go to the area I circled. We sold off all day, and then this is a 30-minute chart. This is the last hour of trading. This kind of high volume, huge buying. That's capitulation. That's what a bottom looks like after some downtrending action. We haven't seen anything like that so far, but that's, if you see that type of action, that's when you're like, okay, I got to really get back involved in stocks. So we got that step one today. And we take it step by step from here. Bunch of charts setting up, bunch of names to look out for, and we're still in the thick of earnings season. So, lots to look out for. Anticipating, kind of some chop, but we'll see what we get from here. What you thinking?
Yeah. So you mentioned kind of like the post-Fed day where, it tends to be a little bit, not as easygoing as it. Yeah. So just scan through some of the sectors, we saw some like very strong action like earlier today, and then we saw a little bit like weaker in a close. So for example, we have industrials, retested that prior high, kind of came back and closed underneath that prior breakout level. We saw very similar in financials. Let me zoom in some more. Let me get rid of a lot of these lines just so we can know what we're focusing on. So we're focusing, the main point I'm trying to show here is all the retest areas of resistance. Get rid of all this stuff. So we're just focusing on this area. So we have industrials today, pushes new highs, closes, back below. Financials, same thing, pushes through highs, looks phenomenal. Intraday, by the closes, kind of crappy. And we kind of saw across what we saw in mid caps, again, push through highs, fade lower. Also mid cap and small caps as well. So seeing that little fade is kind of like what you mentioned, Jake, with, if we don't get that follow through tomorrow and we do get more of that little chop and slop, as you were saying, some of these sectors are kind of showing us that maybe the buyers aren't there just yet. And since we haven't been seeing the V bottoms and we've been seeing more of the markets and even most names respecting the 4 stages that we've been in, technically a breakdown stage for the past, call it almost a month, call it pretty much 2 weeks. Now that we start to base here, as long as we don't really push new lows, this like 536 area, it's probably good to base out here for that eventual move back higher. But just that, just seeing some of the action from some of these sectors, it seems like we might need to see a little bit more of a, not a dramatic pull in, but a little bit more of a pull in before that next real push higher. The consumer staples, though, is probably the one sector out of most of the sectors out there that look the best chart wise. Just a very nice bull flag has been forming for months now, since beginning of May, and then lately last few weeks the flag just began tighter and tighter onto this level. So I would definitely be keeping a big eye on the consumer staples. Even energy, this is again talking about those 4 stages. Energy was in a very clear breakdown stage pretty much since end April. We can see the transformation into that base, that horizontal trading that energy has been in, these orange lines here, and eventually it wants to push back out of this base and then start the next breakout stage and it's work its way back to those highs. So this is like more my thinking of where we see the SPY, and the Qs is a little bit more like, I would say we're kind of like right here, like where the S&P and the Qs are kind of at, like we're pushing up to that break of this downtrend, but we need a little bit more of like a little bit of a pull in before we really get out of it. And even with energy, it doesn't push new lows, kind of pulls in and holds, and then it starts to shift more into that base. And then eventually in time, we should see that breakout of this base and that move back to high. So a little bit more of my thinking. It's definitely, really interesting to see, these semis, the NVIDIA, the LRCXs wake back up. SMCI has, earnings coming up in a couple of days. So we'll see if they wake back up. But is like dead as they look down here, it's like either these names are going to like, smoke support the downside, or we're going to look back in a few months and be like, damn, why were we not looking for like these support buybacks? It's tough with like NVIDIA and LR6A because they just had like these phenomenal days today.
I'm kind of surprised SMCI didn't bounce back harder given the NVIDIA and overall semi strength today.
Mhm.
Very, very surprised with
Yeah.
that.
I mean, the only thing I really think of is like they have, I guess for NVIDIA, let's see, earnings are going to be today up to the close. But yeah, I'm surprised his name hasn't really moved much.
Earnings aren't for a bit. Oh, SMCI.
Yeah.
Oh
Yeah,
yeah,
they're the seconds. Yeah, maybe they're just kind of waiting until earnings. But this is just either like it's going to get crushed here, or there's going to be a phenomenal, buyback.
yeah.
Through get rid of this 800 entry because it's 100 points lower. Just while I'm here, again, definitely keeping a big eye on Amazon. They have earnings after the close tomorrow, so this would be a very good candidate for an opening range breakout on Friday if they have a decent report through that 190. That would be like the ideal. Again, it could easily gap up through that level and take that trade away, but that's the key level. Is going back, quite some time. This level has been setting up. So keep an eye on that. We have this BMRN has earnings, I believe, on Monday. But keep it on this base break through this 87. And still keep it on this Klaviyo. Again, try to, push through this little base area. It's kind of pulling back in. So wait until after earnings, see if there's another little push back up through this base. There's just a couple names keeping on the radar. But I'll pass it back to you, Shake, if there's any names you want to go over. And we'll take it from there.
I'm just keeping my eyes on a few. There's tons of earnings news every day. The one, oh man, I missed out on this. What was this? Powell today. God, I was staring at this thing all night last night. They have really sick earnings. Good lesson in what to look out for in an earnings report. So we were keyed in on this Powell last quarter. They had a huge earnings report, and then so the stock kind of died and nothing happened with it. And then they came out with earnings again. And what were the numbers? One sec. April 30th. All right, I guess this is the best we're getting. So revenue jumped 50% year over year. That's the big thing. You see a huge revenue jump like that, where with these growth companies, really sets up nicely for that opening range break. And you had to buy this one like 3 minutes off the open at 170. I was personally hoping it came down to the 50-day here at 150 at, what was this, 157, I believe it was. Came down to 161. Wasn't quick enough on the keys. Didn't want to buy that 170. Should have bought that 170. But tons of action out there every day in the thick of earnings season. This one I'm interested in is definitely this Now, ServiceNow. Big earnings, gapped to all-time highs. Now it's just kind of, trying to put in a flag or trying to figure itself out on the daily here. Still stretched, still wide, but weekly chart looks like this one wants to go higher. This GE, I think, is still providing a lot of opportunity. Here was earnings day. Huge breakout on earnings, sells off the next day. Inside day, I bought it this day and I didn't stick with it. I'm kicking myself so hard for it. Just stick with the trade. You buy a ticket, take it. And now it's setting up. It's just been moving sideways. 8-day catching up. This thing is like completely healthy. Beautiful inside day today. So I think this one has new highs in it soon. I don't know the route it takes. Kicking myself for not holding this stock, but looking for a setup. Would I potentially buy this inside day? Maybe. Tough mentally when I had it down here for a lesser setup. So just keep it on a very close radar. And then, man, this one that ignited today is Fix, FIX. Really nice bull flag. Has been going sideways since March 24. That's only a few months ago. But after this huge rip, and then it's just done nothing but go sideways since. So it's looking good. It has earnings out of the way. Had a nice little report. Sold off on the report, bounced right back, and now it's just, it gave a nice entry today, honestly. Through this little area here was first entry. So now see if it just goes sideways to get another entry through these, 340, 350-ish area. But another one that looks like, you type up this weekly chart, That's just a beautiful bull flag. It looks like it just continued, just an absolute continuation pattern. You know, if this was a daily chart, we'd say, God damn, that thing is moving higher soon. But it's a weekly chart, so you know, over time, should definitely break these highs and just continue on. Other than that, you know, not don't have eyes on too much. Don't have things. I still got to go through a bunch of charts, but yesterday's and today's action has been very, very tricky. Do we have a bottom in place? You know, we got some more jobs numbers. I believe it is Friday. Market seems like it's going to be pretty sensitive to those, but I mean, the market's setting up for a rate cut in September, so we got to see if, you know, it takes today as almost rate cut news, because now rate cut odds are at like 99% in the betting markets and things like that. So take it one step at a time. These bottoms are a process, and you know, we'll see what we get rest of the week. You know, do we have all-time highs coming in the next few weeks? Do we just have another choppy environment seasonally? August and September, not great months for the market, so it would make sense for us to just continue to chop around. And then October, November, December, if we want to rip into year end along with getting rate cuts, that would make a lot of sense for the environment. You know, we've already ran 16% on the year, so you know, kind of open-minded. I'm not really stringent in any of these ideas. I'm just taking things a day at a time, trying to get some more information. But that's really it. Any closing thoughts you got?
That is it, my friend. It'll be fun seeing you next weekend.
All right. Yeah, absolutely. Some fun on deck.
All right. I think it's that time.
All right. Hey, like, subscribe, comment, whatever you guys need from us. We got y'all. Other than that, see you guys next week.
All right.
If you think you're going to get rich overnight trading, we're not for you. If you don't want to read daily or weekly to improve upon yourself, we're not for you. If you're not interested in saving weekly and building your accounts for the long term, we're not for you. If you're not looking to improve yourself daily, we're not for you. If you do want to build wealth for the long term, read weekly, save weekly, do all the right things for the long game, then we might be for you.